Morning, everyone. Welcome to me turning the volume down. Oh yeah, how you doing? What's up, everybody? I am the Data Lord. This is Crypto and Coffee, and you're watching Decentralized TV. Wow, what a deal! We drink about coffee, we talk about crypto, and we're all here for it, aren't we? Yeah. Yep. So if you would turn up in the chat, say what's up. We always love that. It's encouraging to other people too, just to see like, hey, some of these same people are here every day, and that's how you build community. You show up, you know. So show some love, smash that like button if you would, and let's get into the markets. So I wanted to show you one thing first. So here's the total cryptocurrency market cap. One thing I think people forget about, like, hey, how come the prices aren't going up? Well, you have to look at the whole entire market as a whole, right? If you look at like logarithmic, it's steadily climbing up, but I think linear does show a little bit more of like where the whales are, or where like people who are not actually in crypto long term come in to the space. And so you can see right around December 2020, people jumped in. That peaked out at May 2021, came back down. Sentiment was low July 2021, and then it peaked up again in November 2021, and then fell to a low in June 2022. So, if you have been in crypto around June of last year until now, you're in the bear market, baby. You're a real one. You're not get rich quick. You're really into crypto because you think that there's something special here. So be encouraged, but also know that we're going to beat the snot out of these numbers. And honestly, the event horizons are what we need to look at. Like, how long did it take from, September 2020 until that was over, June 2022? You can see there's about a year and a half of time. I'm sorry, 2.5 years of time that we tend to see, 2 years, 2.5 years, something like that. We tend to see in distance. So if we're in June 2022 right now, or not now, but that's when we hit that low, then it looks like probably 2024, and hint, hint, that's when Bitcoin's halving is going to be happening. So I want you to change the framing of your thinking. Whenever you're looking at cryptocurrency prices, if it's low and suppressed, just look at, I'm increasing my bags. If it goes up high, you can't keep increasing your bags typically. So really take DCAing seriously in the bear market, accumulate serious bags, and then when we do have these huge pumps, everyone will think you're a genius, but really you were just paying attention. You were hanging out on channels like this where we're talking about these topics, and you're educating yourself as much as you could. So that's all I wanted to share on that piece. But looking at the markets, we have 7-day flat on Bitcoin, 1.2% up. And really that happened in the last 24 hours. So sideways is okay. Sideways just means indecision, right? If we're moving sideways, it means we haven't had confirmation of either bullish or bearish behavior. And so we go sideways until something kind of snaps. We have Ethereum at negative 1.1%. So kind of playing the inverse on the 7-day, but pretty much the same thing on the 24-hour. No big deal. But same with XRP's flat out zero. Oh, sorry, negative 0.1. Doge sideways too. Solana sideways. Litecoin down 1.1%. So we'll look at whether it's a good time to accumulate or not. Polygon 0%, and Bitcoin Cash is the only one really that has pumped. And I have to sneeze. No. Man, when will this end? When will these allergies stop? I don't know. Pray for me. Pray for me. So, Bitcoin Cash, people are getting into it because it's proof of work. It's not because it's particularly unique. It's because it's a fork of Bitcoin. It was suppressed in price, and I think a lot of big whales jumped in just to treat it like a shit coin and whale on it. So I don't think it's anything special, but you can certainly play the trade. Um, and that's kind of where the markets look like at the moment. And I hope I don't have to sneeze again. Why? Ugh. We're okay. I'm still here. How y'all doing? Okay. So let's take a look at charts because really I think that's where the sauce is today. Oh my goodness. Sneezing is so stupid. I promise I'm okay. I'm okay. Um, you wear me out. So, looking at, I want us to look at sneezing again. Why? Lord help. My goodness. All right. So, strangely, out of my watch list, helium had a little pump. Don't think that's something you should get into, but sneezing is terrible. But I have a big bag of it, and I pay attention to helium. Um, I think they had a really good idea. The execution was kind of like I don't know. It's like you went to why is it like this? Why? Code bug, thank you. Thank you for the blessings, brother. Thank you, Indo. Um, helium, it's just gonna keep going down, really. Sneezing is so ridiculous. Come on. I took my allergy meds and everything. It's just the annoying thing. It's the angiosperms. They're trying to kill me. Tezos. I'm trying to pull it together. I promise. I'm trying to. But the sneezing and the sneezing. Why are we doing this? I'm probably just gonna straight up get some allergy shots or something. This is tripping me out. Oh my goodness. We good? We do this live. I want you to know when you do a live show, you gotta deal with it. I'm telling you, it's crazy. So I appreciate you guys doing it live. Looking at Tezos though, I really do think this is one that could potentially have some upside to it over the long run once we get confirmation out of the securities commodities conversation. Yep. Maybe. No. No. Yay. I didn't sneeze. So maybe you scoop a bag of Tezos. Like the upside is so easy right now. The question is just, do we go lower? I don't know. Get a bag that's not that big. We kind of confirmed. I want to show you something here. We confirmed a few things. I'll get the eclipse. So you see this little bottom right here, and then you see where we're at right here. So we functionally hit sideways. We confirmed it. So we double bottomed. We tested it. Beep beep. So I'd say that at this point, uh, could be a good pickup for Tezos. Keep in mind, Tezos is one of those interesting platforms that I think people sleep on because they just don't know about it. The community is very, very decentralized. Not only is it very decentralized, but every single person with a node participates in governance. Not only that, but it has NFTs, smart contracts, and is um, self custody staking, meaning you are still in custody of your money. You point it towards a node to act on your behalf for governance, and you get paid for locking that down. So, I mean, those are all on the checklist. Tezos looks nice. Like you might want to order a side of gravy with that nice. That's how nice it is. So pay attention to Tezos if you're looking to get into some risky alt positions. I think this is pretty de-risked at this point. There's not much air left in this ball before confirmation in a bull market. And trust me, even coins that don't have a huge future in a bull market, people pump them because they have huge bags of them. They just pump it. So Solana, if I can put this in auto, uh, we're banging around inside this range here. We're near the top of the range, so I don't know that Solana's a good, DCA pick right now for all coins in a bear market. But if we do hit, sub $18 per Solana, it could be a good pick, especially if it goes down to like $14 per coin. That could be a real good scoop. Because keep in mind, Solana is backed by Silicon Valley people. They are not going to lose. Like, they're not going to let their platform sizzle out totally. Yeah, Solana focuses on development. Yeah, Solana is currently more centralized than decentralized. It's technically a distributed system, not a decentralized system, but it is on the roadmap to be decentralized at some point. They want to get their development stabilized first. I can't dog them for that. It's just people, I think, get into it thinking it's decentralized, and it's not just yet. So I would say when this does get low, it could be a good bag to scoop just to have something. Again, 18 to $14 per coin is probably your target. Ethereum here. I'm telling you, we're in channels right now. We're just rocking, block rocking beats. That's Chemical Brothers. We are chilling though. Anything between like 1750 and like 2000, that's kind of the range we're banging around in. And we have other supports that we're banging around on too. 1900 is one, and 18, yeah, it's pretty much 1800 is one. So right now we're in between 1800 and 1900, and we just are banging around inside of it. So again, with Ethereum, we're not near the high or the low, so I wouldn't say sell or buy. Just wait till you hit these key levels that you see in red over here, and you can kind of play those trades pretty easily. And mind you, the upside on each of those trades is I'll show you this. If we hit the 17, like, you're dealing with like 5 up to 18, you're dealing with like 10% moves up to 19. And if we touch the 2000 dollar mark per coin, like 15% or so, that's if you pick it up at this floor of 17 here. So just keep in mind, it's not a surprise. It's like 5, 10, 15 percent gains. And as you've seen, whenever we have green days on Ethereum, it usually does pump to one of these levels. People kind of wail until it hits that level and they sell. Just pay attention. That's pretty much happening over and over and over again. And you don't have to be smart to figure that out. You're looking at it now. Bitcoin is kind of doing the same thing. We had this accumulation zone down here in the 25K region, ripped out of this big old wedge. Check this out. So this big old wedge that we're in, and coming up to this SEC Coinbase resolution, and then right around here we have the Litecoin halving, right? And so if we zoom in, I always got to do this. So over here, we have bounced out of this wedge that we've been in, and now we're chilling in this little accumulation zone. And we're going sideways, and that's okay. We like sideways. Sideways is predictable, but you can see these levels are like easy. It's so easy. But if you look at like the percentage on this is like another 5%er, right? So like here to here, it's like 5%. So Bitcoin's going to go up and down 5% until there's some reason to break out of this channel. So just pay attention to this specific channel. We're at 3,000. I'm sorry, 30,000. That'd be cool. 3,000 Bitcoin. So 30,000 and 31. Looks like 31,300 is like the top of that. So Yeah. So that's Bitcoin for right now. The upside we're not really going to talk about. It's more let's see us break out of the channel first. Oh, you know what? Let's look at the monthly on that too. I do think that's an important look. It's important to look. You can see we're in a spinning top. You see that? And for those who don't know, spinning top basically means bulls and bears are kind of tied. They're not really picking a lane. And so look at that. This is our monthly candle right here. Uh and you know, it, no, yeah, I guess whatever. Um so you can see wick goes way up here, wick goes way down here. So we have huge amounts of disagreement from bull side and bear side. The month is halfway in, so we'll see how we close on this. But if you were to look at our previous month, we had this big old mint chip dilly bar, because it's summertime, so you got to talk ice cream. We had this big old mint chip dilly bar followed by, a red month. So the pattern we're seeing, are we topping? And we're going to retrace a bit before we get more news. I don't know. And mind you, please pay attention to this. BlackRock, everyone's favorite, they are currently very bullish on Bitcoin. So I personally think that they are going to cause general market sentiment in the bear market to have people go, wow, I really like Bitcoin. I think it's great. They're going to intentionally cause some sort of FUD news to come out. It's going to scare normal people and force the price down just where they're going to buy and then say, hey, it's all good again. So just keep your ear to the ground. That's going to happen. Like you're going to hear. We saw Jamie Dimon do this too. He's like, yeah, Bitcoin's a total scam. He went on CNBC and was it I think it was CNBC, and it was like, yeah, Bitcoin's a scam, it's a big Ponzi, whatever. And a bunch of people were like, oh, I got to get out of it. And as soon as he did that, he went and bought a bunch himself. So it's like, dude, they don't believe the things they say, believe the things they do. That's how you have to roll with these really, really, really big uh, wealth management people. So looking at Bitcoin, though, we are banging around inside of this. This is the hourly, so just on short trades, you're pretty much going to see this be the channel, right? We got maybe 3 to 5%. So I'd just say accumulate, just DCA and Bitcoin here. You never know when it's gonna rip up or down. We're gonna bang around inside this channel. Dogecoin is very important, and then we'll get to Litecoin and we'll get on with stories for the day. So what the hell am I looking at, boy? Boy, what the hell? Why are you online? I don't know what just happened. Como se dice the hell? What in the frick? Why is this weird? Doge, I love you, Doge. My overlink, like, is anyone seeing why I'm seeing this? It's like weird. Oh, we're way down here. I don't know why. All right. Software bug. Software bug. Forgive. Auto fit. All right. Come on. Let's go down here. We're going down here. Wow, this is really fighting me. Why is this way up here? Oh, Bitcoin. So I apparently had Bitcoin overlaid on top of it. That's what this is right here. So that's why I was tripping out. Anyways, sorry for that. That was embarrassing. It's embarrassing. So Dogecoin, zoom out a whole lot here, and you can see that we're in this nice wedge. We're getting a wedgie. We like it. We like the wedgie. But we are moving up to the Litecoin halving, right? That's what August 2nd is. And mind you, Litecoin and Dogecoin are tied at the hip. And for those who are regulars on the channel, they know because we talk about this all the time. And what the hell is this big old wick going? Well, that's AI. Welcome to the future. AI traders are out and about, and they're making big stupid wicks on our channels whenever they see that they can basically buy out all of the limit orders. So I I'm also just careful with stop losses now because AIs will just read them and use it as input data. So take that for what you will. But we are in Doge, and we're just kind of rocking sideways in this accumulation zone that, mind you, is pretty much anything under 7.5 cents down to roughly 4.3 cents. And that's kind of the zone we're aiming at, accumulating inside of. And what does the upside look like on Doge? That's a good question. Let's take a look, and you'll see there's a lot of upside. This could really blow up in your favor, right? And these are weak candles, so you're looking at a very favorable upside days. Man, this wick just freaking ruined my charts. It's so hard to look at. There's this big stupid red line down. Yeah, there you go. Thank you for loading the history. What a good guy. And forgive. The upside here is like stupid. If we even hit here, that's 46% up. If we hit up here, 140%, up here, 400%. So like Doge could legit just rip out of nowhere here. And dude, look at the news. Elon is fighting Zuckerberg. Like that type of weird news is what Doge these days is just feeding off of. So combine the Zuckerberg Elon Musk situation, combine that with the fact that Elon just said on an interview that this year, before the end of this year, Twitter should have a payment solution. Wink, wink. I think that includes cryptos in general, but also including Doge, and anything related to that is going to cause Doge to rip. So I really do think that it's not stupid to buy some Dogecoin right now. I'll not financial advice on any of this whatsoever, but I can personally tell you I am myself persuaded to put a good amount of money into Doge at the moment. So hint, hint, pay attention to what happens here. And then Litecoin, I think we're in a head and shoulders pattern, honestly. I want to give everyone the big picture. We are in this hot zone for the halving on August 2nd. So we're less than a month away from that. We look, let's go to a week view, and it looks like crap because I have too many lines drawn. Forgive. We have this big old wedge that we formed though, right? So inside of this wedge, sharing is caring. Give your friends wedgies. So we have this huge wedge that we formed. You can see there's like 3 different lines of support. We haven't touched this bottom line, so that's feeling good. But we are basically forming a head and shoulders pattern, it looks like. I haven't had confirmation of the head just yet, but oh my goodness. What did I do? Why? Oh, this is hours. We're good. I thought I flipped to days. I want it on days. Yeah, thanks. Thanks for that, bud. Appreciate you. So we have this head and shoulders pattern, I think, is forming. This is typically what Doge does prior to a halving. We have the first rip up that kind of made the left shoulder. I'm looking for confirmation that we're going to form a head here. We might. I really do think if we do, it's going to be roughly middle of next week, around Wednesday next week. So just pay attention. Right now, it's probably an accumulation. Like, I personally increased my position right here because we're moving sideways. I think that we're about to do a head. And I'd say as far as upside goes, the head could get crazy. I don't know. But at very least, if we hit the same as the left shoulder, you're looking at 18% up. I don't know how wild though people are going to get, so I can't really give you a target other than just have a position. Now could be a good accumulation point because we have confirmation that we kind of hit a support. You see this wick right here? We hit that wick with this wick over here. So when we wicked down, we basically hit these two little wicks over here as support and bounced off them. So I do think people are trying to intentionally draw this head and shoulders pattern, and you can play it if it turns out that way. So just pay attention on Litecoin. I think that's how it's going to play out. Your questions, though, should I buy Doge and hold it or trade it? I can't tell you what you should do. What I can say is I think Doge is something that if you entered right now, you have a lot of upside potential in the short and long term. So if you do, here's what I do recommend. This is not financial advice, but this is technical advice. Get a trading view account and go up here and type in, whatever your, let's say, Doge. So if we flick over to Doge, I'll show you this. You'd want to click up here, go to Doge, and honestly, things like Poloniex and Bittrex have really long history. So even if you don't trade on them, use those charts. And what I would do, and this is typically how I handle my my trading when I am doing trades, is I will grab one of these vertical lines, and let's say I entered a position, when we had this big wick down. So I'd click there, so I have a vertical line, and I would enter green. So that says I entered the position there, and then I would go over here and grab a long position if that's what I intended to do. And let's say my position started here. I could set where my targets are going to be. So based on the other price action, I could say, I want, to hit where this wick is, or so maybe where these body candles are. And that's 25%. That's worth it for me. So I'll just hold on to it and see where it goes. At some point, I should have a stop loss where I say I cut my bait. Like if we go below this level, I'm just going to sell, take that little L in that amount here, and wait for confirmation of a bottom so I can say, yeah, I think now is actually a good time to get back in. And then that upside will reward you for you mitigating the risk on the downside. So that's typically how I'll handle it. And I'll just reference these charts. I'll have some little laptop that's just always up, always has this trading view chart up, and I can just kind of eyeball it when I walk in the kitchen, that kind of thing, and see where we're at. Make sure I keep my eye generally on my trades. And so if you're not doing that, I recommend you do that. What's also cool about handling things that way is like you can shorten this up, and let's say I ended the trade right here. Well, great. I could just lock this, and then I know that was a position I had, right? I went from here to here. And so it's easy for you to kind of look at where you entered the market and where you exited for a certain position. So if you're not already doing that, it's just a little explanation of how you might be more sophisticated in your trading. Just stay organized and have a plan. I think that's really the way to approach this. So anyways, I hope that's useful. You guys, let me know in the chat. Do you like it when I go real deep into some of the trading logic and process, or do you guys want this to be a little bit shorter and sort of hit and run updates? Let me know in the chat, because that helps me make a better show for everyone who's hanging out. I know I was sneezing and whatnot. Looks like I got that under control. So praise the Lord. Praise the Lord. I'm going to get into our headline article off the bat, but give me a second. Just give me a second. Yeehaw. Yeehaw. Yeah, Boston saying I needed that. Here talk about it, but wasn't sure how to go about it. Yeah, that's the whole process. And honestly, I'm really big on tools and processes. So if you have questions, I would love to just kind of share what I've tried and what has worked for me, and you can test it out. If you have questions on the implementation, uh, ask me because I want everyone to actually have skills and to be growing and developing because we get stronger as a community. We have a bunch of people who are asking good questions and actually experimenting, getting their hands on the processes themselves. So right now, the United States is heavily influencing the general price of crypto. Right, we have like the SEC throwing around their weight with regulatory clarity. A ton of other countries are probably just going to copy and paste, maybe tailor it a little bit, but it's mostly going to be copy and paste in my view, um, for that policy. And then we have other financial monetary policies because in a bear market, people are risk adverse, right? They don't really know uh, when down will stop and up will start. So a lot of people just with small risk appetites, just they tighten their belt down. They eat more top ramen and canned tuna, and you know, uh, they just kind of get on their better behavior. They're not making big purchases. They're not getting into big investments. They're just kind of treading water. And so you make a lot of money if you have vision and if you have money you don't need to pay bills in that time frame. So we are really in the opportunity zone right now. It doesn't feel like it necessarily, but we are. And so I all of that is prefaced to the fact that the consumer price index it pretty much indicates like uh, inflation, right? Um, CPI falls to 3% in June. The core rate drops to 4.8%, which are both better than expected. So this is bullish news in that it's not as bad as people thought it was going to be. Okay. So let's read economic. I'm sorry, economic. How do I say this word? My brain is so stupid. Economists, I guess, uh, had forecast sizable year-over-year declines in both headline and core inflation for this report. The U.S. inflation rate, as measured by Consumer Price Index or CPI, slipped to 3% on a year-over-year basis in June from 4% in May, according to the Bureau of Labor and Statistics, the BLS, and versus expectations for a dip to 3.1%. On a monthly basis, the CPI was higher by 0.2% in June versus 0.1% in May, and expectations for 0.3%. The core CPI, which strips out volatile food and energy costs, so mind you, it's not factoring food and energy, which, as you know, uh, the pump, that's where you get punched in the pocket bad if policies aren't right. And also randomly your grocery bill's got an extra, $80 on it. Why is that? That's crazy. It fell from 4.8% from 5.3% previously and against forecasts for 5%. The monthly core CPI was 0.2% in June versus 0.4% in May, and the forecasts were 4.3. So they were expecting 0.4, it's 0.3% inflation. It looks like the price of Bitcoin, which has been in a holding pattern, and we showed you that channel, between 30,000 and 31,000 for much of the past few days, rose modestly to 30,900 in the immediate aftermath of that report. Today's report shows headline inflation continuing to decline, which it needs to, with June's 3% down from a peak of 9.1% in 2022. Maybe more importantly to the policymakers, the Federal Reserve, the core rate of inflation finally begun to budge to 4.8% from 5.3% after stubbornly remaining above 5% this year. Nevertheless, markets and the Fed, if recent speakers are to be believed, good question, continue to participate or anticipate another rate hike when the central bank's rate setting Federal Open Market Committee, or FOMC, meets later this month. The CME's FedWatch tool shows a 91.1% chance of the Federal Open Market Committee boosting rates at its July 25th, 26th meeting. So TLDR, what's the too long didn't read? We have high degrees of confidence that we're going to basically see a rate hike. Interest rates are going to go up, but inflation's not going up as much as we thought it was. So it's kind of a mixed bag. It's like, yeah, inflation's not up as bad, but you're still not going to be able to get a very good loan on a house or a very good loan on a car. That type of like large purchase is probably going to be deterred with very high degrees of certainty late this month. So uh, I think what this means for Bitcoin is probably more sideways, honestly, and I'm okay with that. I'm here for the sideways. Sideways kind of gives you an expectation, and here's the deal: we tell everybody that they should DCA because it's a tried and true strategy. If you DCA, you end up scooping a lot of this low dollar Bitcoin. Even if you scooped a few bags while it's up, um, if you were to look at Bitcoin's price action, for example, you can see that typically it's not up. When it does go up, it doesn't stay super high for that long. It goes up and then I'll show you a weekly chart and you'll be like, oh, I see. So if you look at the weekly chart as I'll flip over to this real quick. If you look at the weekly chart here as each candle is a DCA. Maybe you get paid weekly, maybe you don't. It is what it is. Wouldn't that be nice if we got paid weekly all the time? But look, if you look at each candle as a DCA and you were to just kind of play the average, like how many weeks are you buying Bitcoin at the absolute peak? You know what I mean? Like if these really high ones are your DC are like one DCA, how many DCAs did you have that were low? You see my point? Like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, like probably 30 there. So the majority of your pickups, if you DCA, are one, it gets rid of the whole psychological element, which is where most people fail in their trading opportunities. And then the other piece is you're not going to get beat up too bad by these little peaks where we're just rocking super high. That might be like, you know, 10% of your entire DCA portfolio. And so what ends up happening is it ends up looking a lot more like that is kind of your pickups. Like these low lows don't affect you because you know these high because you're scooping nice, and then these high highs don't affect you because you just kind of faithful true DCA it. And so it's like you're buying something here versus buying way up here or way down here. Sometimes you kind of just play the center. So that's why it's smart. Like you're de-risking yourself because your emotions are what makes you go, oh, I don't know, maybe I should sell, and then you lose out on a ton of opportunities. And maybe you might even forget. Maybe life gets tough, and then you spent that money, and now you're not in the markets anymore. Uh, that's the whole deal. Like you just kind of want to have time in the market, so compounding can do you a solid. So that's why we're looking at all of this right now. Yeah, inflation's going to go up. It's cool. Don't trip. Just make your coffee at home. Take the money you'd be throwing at picking up breakfast or whatever on the go. Uh, make yourself overnight oats or whatever. Make yourself coffee at home, and throw that money into Bitcoin, and you'll find yourself playing with a lot more than just overnight oats and home coffee. You feel me? You feel me? Let's take our next article here. U.S. Senator Cynthia Loomis and Kirsten Gillibrand proposed legislation to regulate digital assets. So, by the way, it is hump day. It's hump day. It's hump day. You better hump that like button. I'm sorry, that was rude. Uh, I'm so gone. Propose legislation to regulate digital assets. So U.S. senators. Let me zoom in here a little bit. There you go. Cynthia Loomis and Kirsten Gillibrand are set to propose a new bill today to regulate cryptocurrencies and other digital assets in the country. Loomis and Kristen, I think that's meant to be Kirsten. They spelled that wrong. will reintroduce their Responsible Financial Innovation Act amid the ongoing debate about the future of digital asset regulation. The latest digital asset bill will aim to classify most crypto assets as commodities similar to gold. You hear that? So the latest digital asset bill will aim to classify most crypto assets, most as commodities. That would be dope. I don't think that's going to happen, but that would be dope. There is a lack of clarity in the industry about homie freaking spell check, which financial watchdog should oversee cryptocurrencies, U.S. Security Exchange Commission, or Commodity Future Trading Commission, the CFTC. Both regulators have come after crypto companies for breaking the laws supervised by these watchdogs. While Coinbase is being sued by the SEC, Binance is facing a lawsuit from the CFTC as well. The proposed bill expected to ban proprietary trading. A person with knowledge of the proposed bill revealed that if the legislation is passed, it would force crypto exchanges to keep customers' assets in third-party trusts. I think that should happen anyway. So, look, if a company, if an exchange is going to be not giving you self-custody, and most of them don't, they need to have a third party who is holding their money. That's that way people in the exchange aren't self-interested. They can't pump the price and keep your money. There's a third party that has to also cooperate if there's going to be some crazy crime going on. So also on the low key, this whole idea of a third party trust company, I'm looking into that as a business. I would love to have it basically a Fort Knox for crypto. I think that's a super cool idea. It would also stop exchanges from engaging in proprietary trading. So I got feelings about that. Proprietary trading is when exchanges trade funds on their own platform, right? And so we've seen a few funny things happen because of proprietary trading. It's like so you buy a bunch of Bitcoin on, let's say, Kraken, right? This would be like Kraken trades your money on their own platform without giving you your money, right? Legislation would also reportedly prohibit crypto lenders' ability to finance crypto assets. And I want to make sure I understand that right, because as I said that, I was like, am I sure here? It's also called prop trading. That's what it is. So let's see here. Proprietary trading or prop trading occurs when a bank or firm trades stocks, derivatives, bonds, commodities, or other financial instruments in its own account. So yeah, it would basically be the bank or the crypto exchange in this instance trading your money on their exchange, using its own money instead of its client's money. Interesting. This enables the firm to earn profits from trade rather than just the commission it receives from processing trades. Oh, okay. So basically, you can't allow Kraken to trade on Kraken. You say, no, you're not doing that too. So insider trading is kind of the idea here. The legislation would also reportedly prohibit crypto lenders' ability to finance crypto assets. And actually, I'm gonna throw this in the chat because if you want to do some more reading on that, you should. Let's all educate ourselves and get a little tighter here. The legislation would also reportedly prohibit crypto lenders' ability to finance crypto assets with collateral already pledged for different loans. Gundy, what's up, brother? I see you. Good morning. Happy hump day. Make sure you hump that like button. The Republican Senator Cynthia Loomis said, it is critical to integrate digital assets into existing law to harness the efficiency and transparency of this asset class while addressing risk as this industry continues to grow. It is critical that Congress carefully crafts legislation that promotes innovation while protecting consumers against bad actors. Yeah. See, I'm with that. I like that she's looking at like, look, if we're gonna have centralized exchanges, they're gonna have some rules they got to play by. That's fine. The bill incorporates suggestions from the SEC. So the pro crypto senator from Wyoming confirmed that SEC and other agencies were consulted to make changes in the bill. They have seen it. We asked them to tweak it, and we've incorporated some of their changes, she said. Loomis still worries that the SEC and other agencies would try to kill the bill. She added, after all our efforts to reach out to them and work with them, I do not want them to come in at last minute to put their kibosh on this. Several Republican lawmakers have openly opposed SEC Chair Gary Gensler for his approach towards regulating the crypto industry. As reported earlier, House Republicans introduced a bill to sack Gary Gensler and make other reforms at the SEC. The SEC has so far deemed over 60 cryptocurrencies as securities. Yeah. So, interesting stuff here. I really am fascinated at this little bit here, saying that this is aiming to do the opposite of what I just said. This bill is aiming to classify most crypto assets as commodities, similar to gold, as opposed to the SEC currently, like what this was saying with the whole 60. So far, the SEC said over 60 are securities, but this bill's like, hold up, rewind that tape. Most of them should be commodities, not securities. So, the whole Howey test is the piece here. And for those who don't know, I'll give you this as well. The Howey test really is the critical detail we're running into here. It's like, the U.S. Supreme Court had a case where they basically determined that a transaction qualifies as an investment contract, therefore it would be considered a security. And so their whole test is an investment contract exists if there is an investment of money in common enterprise with a reasonable expectation of profits to be derived from the efforts of others. So this is one piece why, if a cryptocurrency starts with an ICO, an initial coin offering, that is technically, you're saying, hey, I'm going to buy some of these coins. I'm expecting those tokens that I originally got. I keep saying coins. I got to play by my own rules. They call it an initial coin offering, but really they're ERC20 tokens, just saying, yo, if I buy these, then when we have development go a little further, this price will be up even higher, and then I can sell. And so you're expecting the software development team, derived from the efforts of others, will be developing into the software, making it more and more valuable. You're hopping into it, an investment of money, to basically fund them, give them burn rate to develop it. And then you're expecting it to be worth something because you like their vision and you expect to make a profit here. So that's one piece. We do fit that on most cryptocurrencies that do ICO. The Howey test isn't important for situating blockchain and digital currency projects. No, where's the other test? Here we go. So you have to invest money. So you bought something, a token or a coin, in a marketplace where anyone could buy it. So it's not private, it's public, right? You expect to make money off of it, and you expect someone to do the work to make that money. So I'd say a lot of cryptos kind of do fit this, but Bitcoin doesn't, because Bitcoin didn't do that. I think a lot of proof of work coins don't fit this test, but a lot of proof of stake coins might fit this test. And so, I mean, that's where that lands. It's cool to see, though. At very least, they're shooting for the stars. You might shoot for the moon, you might land among the stars. The whole idea. I I really don't think they're going to get the okey doke that the majority of cryptocurrencies are going to be classified as commodities. But I mean, if you shoot for most, maybe you'll land with some. And I think that's probably the goal here. If you were to ask me, I would say proof of work coins are going to be most commonly classified as a commodity, and proof of stake is probably mostly going to be considered securities. So we'll see. We're certainly going to see. As a community, we're going to find that out. So Ethereum, news on Ethereum. You know how Vitalik was talking about, like, yeah, it's not, even after the upgrade, it's still not as fast as we want it to be. It's not as cheap as we want it to be. Yeah, we know. We have a lot to fix. He basically said those things. Ethereum more recently went through the upgrades to allow people who were staking Ethereum to remove not their principal but their profit. Basically, their staking yields they were allowed to take. So what's next here? Ethereum has a transaction per second, or a TPS boost. You know, in Office Space, the TPS reports. That's what this is. Transactions per second, just how fast the network can go. Starknet Quantum Leap goes live. So Yuri Kolodny, the co-founder and CEO of Starware, said that Starknet's latest Quantum Leap upgrade makes high TPS a reality on the Ethereum mainnet. Okay. Look, I like this a lot. I think that's good for crypto in general, and this guy should not ride that. That's not the look, guy. Also, I really hope that this isn't radioactive, because if it is, it's right near your jewels, my guy. Careful. The much anticipated Quantum Leap upgrade by Layer 2 scaling protocol Starknet was recently deployed on the Ethereum mainnet, allowing for as much as 90 transactions per second, boosting the network's speed. ID is at the core of every activity, so it's better to anticipate regulatory changes and build a compliant infrastructure from the start. Okay. More TPS, daddy. Starknet mainnet Quantum Leap. Wow. And then is this just pumping some NFT project, or what's this about? Is that the Starknet? Let's see what this is. So he says more daddy. If you're wondering what that's all about, Starknet. Okay, we'll check that out. But anyways, according to Yuri Kolodny, the co-founder and CEO of Starware, this is a momentous day for the Ethereum blockchain as the scaling ceiling has been smashed. Well, we'll see. He explained that high TPS is finally a reality on Ethereum mainnet because of the new update he added. We said this upgrade would deliver potential TPS of hundreds within Q3, and only hoped from the stress test to check we're on target. A few dozen TPS at this early point would have left us excited. So a few dozens, like 24, would have been impressive, but we got more than we bargained for. Kolodny also highlighted that they've managed to achieve a consistent 37 TPS. In addition, the executive also noted that during its peak moments, the test showed that transfer transactions per second almost hit 100. Yeah, we're gonna have to have you come in on Saturday too, sir. Yeah, Yeah, on Sunday. Could you come in on Sunday? That'd be great. On July 5th, Starknet's Quantum Leap has been deployed in a testnet, recording speeds of up to triple figures at the time of the testnet deployment. The team announced that they were expecting at the time to inclusion to be around 15 seconds. This means decentralized applications, or dApps, also known as what's up, Gundy, what's up, Indo, give my boys dApps, can confirm on-chain transactions in seconds. However, the reality exceeded this expectation. We were aiming for latency of under 15 seconds. So that's the lag, 15 seconds. And that's ping in a video game. And in the end, the vast majority of transactions had a time to inclusion of under 10 seconds. 10-second ping. Let's go. He explained, according to Starknet team, more throughput and faster inclusion would pave the way for faster decentralized finance applications. This also means that AAA rated games will become more realistic within the network. Cool. So I'm with that. That's cool. They're showing facts, figures, numbers, legitimate speed boosts on Ethereum. That's great. Here's my whole deal. I think the most, because I'm an architect, that's what I do. I'm a technology architect by trade. I really think the best architecture, and I think we're a little far from this. We're building the ingredients for this, but I think the best thing would be have a really high hash rate proof of work coin like Bitcoin. We have ordinals now. Store some validation, almost like snapshot data, like a snapshot hash. That's kind of what ZK Snarks is, like the whole zero knowledge thing of where you're like taking a value, you're encrypting it, you're storing that encrypted validation somewhere public, but someone has to have you basically have to be able to have the private key to decrypt that public key. But you can validate on proof of work that no funny business happened. Okay. That would allow some of the securities of proof of work to be extended to proof of stake. And I think proof of stake is fine, even in the instance of like Solana, as long as you have to reference the proof of work blockchain to make sure no funny business happened. And I think if it doesn't match what's on the proof of work, it should be forced to have to back up the truck a little bit and redo validation. I don't think the blocks should be allowed to be included on the proof of stake and for that to continue if it doesn't match what's on the proof of work. So if they did this, even if the proof of stake system wasn't decentralized, it would still have to reference a decentralized system for validation to move forward, which means you would have a very high degree of confidence that most of the data on a proof of stake system would be validated by proof of work. Does that make sense? It's almost like you have a save state in proof of work. So I'm really interested to see how long it'll take for that architecture to pop up. I'm not actively architecting layer one blockchain stuff. So I'm interested to see what the hangups are there. But yeah, if you build it, no, it's not, does it hash? It's if you build it, it will hash. They will hash. Yeah. And architecture tech. Yeah. Architecture tech. Anyways, let's keep her moving here. We got one more article for the day. Speaking of proof of work, Riot blockchain, Riot platform stock price is defying gravity as Bitcoin sleeps. And I'm going to pause for a second. I am driven crazy when people talk about Bitcoin mining and then they show GPUs. Nobody's mining Bitcoin on GPUs profitably. This is not the machine that does that. These are machines that are mining things like Ravencoin and Flux. And stop showing GPUs and calling it Bitcoin mining. It's goofy. It shows you're Crispus, you're goofball. Riot platform share price has surged to the highest point since April 2022. This rally is happening as Bitcoin remains at 30K. Also, Gundy, does this bother you? Does that bother you? People saying like, yeah, it's Bitcoin mining, and then they're showing what are these like sapphire cards, something like that. I don't know about that, man. So the stock has risen in the past 3 straight days and now is trading at the highest level since April last year. In all, the shares have jumped by more than 430% from the lowest level last year. Mining stock is doing well. So Riot platform, I'm going to zoom in just a bit. Bah! There you go. Formerly known as Riot Blockchain, is one of the biggest Bitcoin mining companies in the world. Therefore, like other mining companies, the firm makes money when BTC is doing well. Bitcoin has done well this year as its price jumped by more than 90% this year. Recently, however, demand for Bitcoin has eased while its price has remained above the important point at 30,000. Bitcoin liquidations have also dropped sharply in the past few days. Yeah, it just shows the article is a noob. And the funny thing is, there's people who aren't noobs. They should know better. Uh, the language I like to use, if someone acts like a noob but should know better because they've been in the space for a little bit, I like to call them a nub, N-U-B, as opposed to N-O-O-B, which is just someone who's going on Google and typing and then copy paste, but probably have no idea what's in there. Yeah, I know. Bitcoin has done well this year. Its prices jumped by more than 90% this year. Recently, however, demand for Bitcoin has eased, while its price has remained above the important 30K. Bitcoin liquidations have also dropped sharply in the past few days. Therefore, ergo, the Riot platform stock price is rising for two main reasons. First, some analysts are still bullish on Bitcoin. I wrote the analysts at Standard Charter see BTC hitting 120K by 2024. This number is legit. I really think that's going to be true, and I think we're going to hit higher than that. In a separate report, Tim Draper, a billionaire investor, said he expects that BTC will surge to over 325K in coming years. And look, if BlackRock does what BlackRock says they're going to do, it's going to go bigger than that. DCA, I'm telling you. DCA, and we can eat Korean barbecue later. Tell you that. Second, investors believe Riot will increase its mining capacity in the coming months. The company recently acquired 33,000 Bitcoin miners. This means ASICs, by the way, for 163 million. Okay, that's a good pickup. So how high can Riot stock rise? So looking at this chart, you can see it's coming up. So why does this matter? This is so Grayscale Bitcoin and Riot platforms. Those are the two main places people in the traditional markets, 401ks, Roth IRAs, that type of thing, are putting their money into crypto. And what that means is we're tapping into a new pool of money to raise, this overall market cap of crypto. So that's why it's important. Turning to the daily charts, we see that Riot share price has been in a strong bullish trend in the past few months. This rally accumulated in the shares jumping above the key resistance level at $14.37, the previous year-to-day high. Riot Platform's share price has also moved above 25-day and 50-day moving averages. That's really good. While average directional index, or ADX, has moved to 26.5, an ADX figure above 20 is a sign that bullish trend will continue. I actually didn't know that. That's cool. Therefore, while a pullback is possible, there is a likelihood that Riot share price will continue rising as buyers target the resistance level at $20. And so, tell you what I'll do. Right here, I'm going to I'm gonna go into here, and I'm just gonna add, because I have Grayscale in here, I'm gonna add Riot, and we'll follow Riot platforms on NASDAQ as well. But we'll pull this guy down here. So looking at Riot here, this is what they're talking about. Riot is on a rip and tear. From that bottom, what's that upside so far? Yeah, 400%. So people in this short time frame made 400%, and they probably knew that was going to happen too. But so far in 190 days, so in half a year's time, they made 400%. So there's that. And then additionally, if you were to look at Grayscale pulling that same, oh no, I picked the wrong tool. Why am I like this? You guys, y'all better be praying for me, man. 172% on Grayscale. So people who picked up this low over here, they're sitting nice in their traditional market accounts. I think they kind of knew that we hit the floor there. That doesn't necessarily mean the floor of Bitcoin price. It means the floor of sentiment, I think, which is totally different. And what's the date range on that? Like another half a year, probably 50 days less. But either way, I'm supposed to be sharing this, and I'm totally not. Y'all better be kicking me. Yeah, you probably have no idea. what picture they're putting out there. So looking here, 172% and Riot over here from this bottom to this up here, like 433% on Riot. So I think the fear, uncertainty, and doubt, the FUD was big down here, but we have seen a huge move up. So I don't know, man. Don't sleep on these. If you have money in traditional markets that you don't want to take out of there, you can probably play crypto as part of that portfolio with Riot and Grayscale. Not financial advice, but it's looking like they're going to be okie dokie. So, anyways, that is our show for the day. Thank you so much for joining me here on Crypto and Coffee, only on Decentralized TV. And let's take a look at nothing. We'll take a look at something. Hump that like button. Go ahead and give me some love here. It helps noobs find this channel. That way they can be informed and grow up in their thinking. And that's what you want at the end of the day. More people knowing what they're doing. Self-custody. Till next time, I'm the Data Lord. This is Crypto and Coffee here on Decentralized TV. I love you. I'll be back on Friday. And, just keep calm and hot a lot. Hasta knows. Also, go get some coffee refill. Go ahead. We got work to do. Let's go do our jobs.